I have been able to cover over $11,000 of medical expenses since April of 2024, just over 2 years, with very little dent to my overall net worth, thanks to HSA, a health savings account. If used properly, it is more than just a savings account for high deductible premium plan. It can be used to grow your wealth, another investment option. At the same time, you can use it to expense qualified medical expenses tax-free. Today, I'm going over how I have been able to cover my expenses over the last 2 years by leveraging this triple tax advantage account. Let's go over the number of how I was able to cover $11,307 of medical expenses with little dent to the overall net worth. That's because back in August of 2023, my total balance was $15,671, all of which was in available to spend bucket of the HSA. That was not invested at all. It was $0. That's because when my previous employer changed the custodian January of 2023, I failed to move it from the spent bucket to the investment bucket. The previous custodian, I was investing in it, but when it moved, it goes into the cash bucket until I instructed to go to the investment suite portion of it. So I lost an opportunity of investing in the market for about 8 months. Don't make that same mistake. So I invested this portion since 8/15/2023. And since then, it grew to 19,861 right before I quit my corporate job in April. And I set aside $3,000 for any medical related expenses. And I had over $6,000 invested in the investment suite portion. This way, you don't want to force a sale when the market is down. So I allocated just enough fund for projected expenses. So even though I used up $11,307, and my balance at the end of April is $14,329. $1,900 is available in cash to expense any medical expenses, and $12,365 in investment account. So even though I spent $11,000 since I quit back in April, instead of being down to only $8,000, I have over $14,000 in the account, thanks to power of investing. Yes, it is a little bit lower, but that's not bad considering I could have been worse. But thanks to the growth of the market, I can still expense over $11,000 and still have over $14,000 2 years later. You can read through HSA is beyond a savings account, or you can also go through my YouTube playlist that has information regarding HSA. Here's the description of how the money flow. In August 15, 2023, I invested all the lump sum portion from the previous custodian. And since then, it has gone through 2 rebalance periods, one in August 15 of 2024 and another one August 15, 2025. So it sells a portion of stocks and buy a different portion to keep it balanced based on my asset allocation. And the dividends I have received so far since the initial investment, and the buy based on the reinvestment dividends, as well as the contribution for that small time frame. And then the sell amount that I had to sell to cover my medical expenses over the last 2 years. And the market gain for over 2 years, over $6,595. So that keep me with the investment balance portion of $12,365 right here, plus the cash available and on hand. Here's my portfolio return since my previous employer changed to this HSA custodian. Over $7,498 return. Here's my portfolio consisting of 4 different funds, and they consist of growth funds, top 500 US company, mid-cap funds, and small cap fund. And this was my original target allocation. 10% goes into growth, 60% goes to S&P 500 index, 15% goes to the mid-cap, and 15% goes to small cap. Here's the current allocation based on the performance of each of these funds. So they're fairly close to the original target allocation. And look at the performance going as far back as August of 2023, a very respectable return for all four of the funds: 99%, 77%, 53%, and 50%. And take a look at the portfolio target. This was how I set up the different asset allocation. And you can see the expense ratio was dirt cheap, in my opinion, because 0.02%, that's nothing, 0.05, 0.05, 0.03%. And the yearly return, 5-year return, 10-year return, lifetime return. Having a lifetime return of 9, 10%, that is a very respectable return. You can grow your wealth with that annualized return. And my HSA sweep has all of these available to invest in if I so choose to. I also set it to auto rebalance. August 2026, it will rebalance and try to get it to the original target allocation that I set. I know I went through the HSA funds very quickly. And if you're new to HSA and investing inside the HSA, look through my YouTube playlist. I have how to invest in HSA, how to sell, how to reimburse yourself, and how to grow your wealth like the 1%. That's when I go over the different funds that are available, how to read it, how to understand it, and which one is the right funds for you. The takeaway for this episode, for my target audience, low to middle class, the working class, you see the power of money making money. It is much more efficient at making money than you and I can. You know about 401k contribution. You know you should take advantage of the employer's match at the minimum. But if you're able, financially stable, to be able to put into the high deductible premium plan, contribute to HSA, and set portion for the medical expenses that you foresee, and leave the rest to invest and grow for you, it can be a great investment vehicle to grow your wealth well into the 60s and the 70s. HSA is a triple tax advantage. It goes in tax-free, it grows tax-free, and it covers medical related expenses tax-free. That is approved by the IRS. And also, if you have money left in that balance into your 60s, when you are over 65 years old, you can withdraw for non-medical related expenses without that 20% penalty. But the withdrawal will be treated as a normal income, where you get taxed on that withdrawal, but you don't get that 20% penalty after 65 years old. So in addition being triple tax advantage today, it can also be another mean of income when you're over 65 years old. I know in your current financial situation, with the current inflation, cost of gas here in my area is $4.99 a gallon, and housing is through the roof, groceries through the roof. It may seem like it is impossible. But if you take advantage of stackable savings, you save a little bit here, you save a little bit here, you save a little bit here, and take this little saving that you have and allow it to grow, compound interest and time will grow your wealth. You're not going to be multimillionaires or millionaires. I'm not even there either. But I know for sure that you'll be much, much better off financially in the future than you do now. Because where I'm at today is many, many miles away from where I used to be in my 20s and my 30s. Don't lose hope.